Good morning, traders. Welcome to this live webinar here. We're going to take a look at automated trading and, of course, some ECS updates, specifically with regard to Black Friday, which is coming soon. And we have all the details. We had a question last week if SWAT would be included. And yeah, we have a special for that too. We have a special for everything, SWAT, Black Widow, all the EAs. So keep tuned, keep watching for a full overview of that. First of all, we're going to take a look at what I promised last week, which was to discuss walk forward testing. I'm going to show you some examples from that with our own LOA.EA and how that was done with the help of Carlos Cordero, our programmer, and ourselves. We did a walk forward testing recently for LOA London Open Advanced EA with Bitcoin, and that worked well, and I'll explain why that worked well and how that was done, etc. So those are the two main things for today. So let's start. Well, maybe a quick note before we dive into these topics. Generally, of course, U.S. elections bring some volatility, but not a massive volatility in the markets. So after the week of the election was over, we on the profit share model moved up to 5% again after that week. And we're slightly down in November. Let's see how this month ends up, first of all. And hopefully we can see some turnaround. There are some long setups open at this moment, I believe. So let's see if those hit targets or not. But yeah, basically the risk is back to 5. It was only meant for that 1 week because of the potential for the results to come in and change perspectives, and that could create volatility in the market. So that was the reason for that. All right, so let's talk about the walk forward testing. As I mentioned, it's on one of the 4 EAs that we have on our website. It's LOA.EA, which stands for London Open Advanced. It trades the breakouts during the London Open. All right, and we have the best results on Euro versus the Australian dollar, but we're seeing also even maybe better results on Bitcoin, XBT, I think, versus the USD, to be precise. And what we did was Carlos made 6 optimization cycles. Well, so what basically walk forward testing is is that you choose you have your strategy and you choose a set of parameters, all right, and then you test those parameters, and then you optimize it again. And then you test those parameters, and then you optimize it again, and you test those parameters. So there's always this in sample and out sample consistently. And the reason, I guess, for that is that if you just back test, you kind of can skew your parameters so that in a way you're over optimizing for a certain period of time. Now, of course, that's why always live trading is important, because that's real results achieved in the past. Of course, real results do not necessarily guarantee everything in the future, the standard disclaimer, but it shows some more verifiable results and track record, and that's an important data point, of course, for analyzing that EA. Back testing is good too, but the disadvantage of that is that we kind of there's the risk that we use parameters that are specifically good for a certain period of time for that backtest. Let's say you backtested for a year, and the strategy works well with certain parameters. Maybe it was just a coincidence that it worked well with those parameters during that year, right? So that's something you want to avoid. So one way is, of course, to test it accurately with a high modeling accuracy. That helps a lot. 99.9%, of course, shows real results obtained in the past, whereas 90% really doesn't mean as much, because those results in the back testing could look good, but in forward testing, it typically is worse, or a lot worse, or goes into negative. So good modeling accuracy is one thing. Testing, of course, a big set of data. I mean, the bigger set of data, the more rigorous. I mean, the more it has lived through a period of time, of course. So that helps. And another way is in and versus out sample. So you have certain parameters that you get in 1 year, and you test those parameters on the second year. So if you see a similar equity curve in the second year as in your first year, well, then it's good because it's showing that it's behaving the same. If it's totally different and first year is very good but the second year is bad, that shows that we probably over optimized the first year. So that's in versus out sample. And another good thing is walk forward testing. So that's what I want to explain here. So you take parameters, optimized parameters or settings, and you test that in the out sample. And then you do that again. You get optimal settings for the next period, and you test it again. So we did it 6 times, and then you compare each set you compare to the back test. So you're going to get different settings for each of these 6 optimization cycles, and then you want to compare the optimization cycle results to the backtesting results. And if there are big differences, then the EA is more vulnerable. Whereas if the results are the same, that means that regardless of the settings we use, the results are showing quite the same patterns. So it's more robust, it's more stable. Now, I want to give a disclaimer here. I am not an expert on this topic at all. I am just sharing my knowledge and what I heard and what I understand to this point. All right. So I just want to make clear that I'm not an expert in this field. I'm doing my best to learn as I go and to get more info and knowledge about these things. And we rely with Carlos on a lot of these things. And that's great to have Carlos in our team that knows so much about it. But yeah, I'm still, with trading, I know a lot. I feel very confident in explaining all these things. I feel confident to explain this, but I'm not saying, I don't want to claim here that I'm expert on this. I'm just sharing my my knowledge and wisdom that I have on this to the best I can. And if things are missing, of course, feel free to add. So let me check if this is clear. I only have one screen, unfortunately. So I need to exit. Woody is asking, what do you trade with LOA.EA? So LOA.EA, at this moment, we trade Euro-AUD. And now Bitcoin is looking pretty good. So we're also trying trading Bitcoin live as well. But that's relatively new. But it has passed all of our tests, green lights. So now we're live for trading it. So of course, before we trade with live for trade, live money and actually trading it, you want to make sure that it's worth it, right? That you're not putting your money at risk for something that is questionable, might not be worth it. So LOA.EA Bitcoin passed all of those tests and check marks and checks, green light. So yeah, it's looking good so far. Now we're trading it live. So I hope it's clear what I basically you change the parameters and settings 6 times. And for each of these optimization cycles, you have an in sample and an out sample. So for each cycle, you optimize with in sample. So in sample, you get the settings. In an out sample, you test how those settings from the in sample worked out. And you do that 6 times, basically. Okay. So 10 months we have for the in sample, and then we have 5 months we did for the out sample. This is what we did. It could be different but here we have it. So for the in sample, for the set 1, we used 7 January to 2017 to 5 January 2018. Okay. And the out sample, let's see, from 5 January to 10th. Wait. Oh no, it's the other way around. This is month and this is other sequence of the date. Sorry, so this is actually 1st of July. Excuse me, not 7th of January. I read it as like a European format, I guess. Whereas this is the US format. So 1st of July 2017 towards the 1st of May, and then 1st of May towards the 1st of October 2018 is out of sample. Then 5 months later, 1st of December, every 5 months, the in sample starts 5 months later. Every in sample is 10 months, and every out sample is 5 months. The BT stands for the backtesting performance, so backtesting profit and backtesting drawdown, whereas the WFT stands for walk forward trading profit and walk forward trading drawdown. So if we compare the results of both, the walk forward versus the backtesting with the profit and drawdown for the first set, number one. So WFT managed to gain 17%, whereas the backtesting gained 18.5%. The drawdown was slightly worse, 6.6 versus 4.6. But generally speaking, very close, very similar, as you can see. If you think that 17 versus 18.5 is a big difference, in my view, it isn't. It's within a very small margin here. Then let's take a look at the second set: 7%, 6.8%. And the walk forward test had a better drawdown, 4.2 versus 5. So in the first set, back testing was better. In the second set, walk forward testing was better. But both were very similar. Set 3, 20% versus 35%. Now this is a bit more substantial difference, and it's just about half, or a bit more than half, but that is a difference. Both are positive though. 11% drawdown is the same. Set number 4, 11 versus 21, 9 versus 7.7% drawdown. Set number 5, 21.5, 22 is about the same. And then set 6 is probably the biggest difference in relative terms, at least, not in absolute terms. 4.4 versus 13.8 and 8 versus 7. So all in all, if we count it all up, 24, 44, 55, 80, 82-ish percent, I think, quickly calculated. And 104, I think, or 115. Let's see. About 115%. So the backtesting did perform better. It performed about 115 in total, and this is about 80%. But we still think that overall 80% was a very good result. Both are very clearly positive and showing quite strong positive numbers. Plus, the drawdowns were always very low. I think that anything around 11% or lower is a very low drawdown in Forex, CFD, and crypto trading. Or this is CFD trading, actually. It's a CFD of Bitcoin in a way. So we think that therefore the EA showed how robust it is. The in and out sample results were good, and the walk forward test was good as well. The walk forward test results were slightly worse, but we see a very close relationship between all sets, and no massive gaps, like one being minus 20 and the other plus 50. All were quite aligned. Some small advantages, some small bigger gains with back testing, but we think it was robust and positive correlations. So definitely got a green light from our point of view, at least. Okay, but anyhow, this serves as an example of a walk forward test, and is how you can try to avoid over optimization and relying too much on a set of settings basically that are maybe skewed in a certain period of time. Okay, so this is an example. Let me check if there are any questions. The test was done with a with a standard lot size, sorry, a fixed lot size of half a standard 0.5 minis. We didn't use a risk percentage because of the fact that there would be compounding and it would skew the results. So with compounding, if you would use 2% risk, for instance, or 1% risk, it could be more perhaps as it compounds. It would be maybe more. I could imagine it could be more. But this, to avoid that, actually we used fixed lot size instead. In fact. All right. So yeah, here you have the sets. This is the first set. So you can see equity curve, very similar in its movement. Let's take a look. The top one is back testing. The bottom one is walk forward testing, by the way. So once again, back testing at the top. So back testing had a little bit better push up here. This walk forward testing had an earlier push up. Walk forward testing had a bigger push up here. So some small differences in this part. But generally the kind of direction, the how it moves, again, quite similar. A little bit more differences than the last one, but generally the flow quite similar. Here with walk forward trading, we had a bigger drawdown. Here, this is quite similar, maybe a bit more downside here than on back testing. The fifth set, quite similar, and the sixth set, quite similar. All right. Now regarding so these are good things to do with if you're creating EA, when we're creating EA. So good to be aware of that, and that's why we wanted to share that with you. Regarding the second point, Black Friday, it's going to start this Saturday already, actually, 21st of November, and it's going to last up to and including the 2nd of December, which I think it's a Tuesday, but I'm not sure by heart. Everything is discounted. So first of all, Black Widow from Nenet, 35% off, and includes 1 month of ECS Live. SWAT, also 35% off. I had a Wave webinar and someone was asking about SWAT. So here it is, 35% off in that period of time, in those, I guess, 10 or 12 days. I'm not sure. Also, the EAs, SWAT is, of course, my own course and system, by the way, just in case you don't know what it is. It's simple wave analysis and trading. There are 22 plus hours of videos, 70 plus videos, 22 hours of recordings, all the systems and templates and indicators and strategies, ebook of 600 pages, all included. So that might seem a bit overwhelming, like, oh my God, do I need to do that much? But it really just goes into great detail to explain everything. And of course, you can skip parts that are clear to you. And, from that point of view, it should be faster. So it explains really technical analysis, charts from A to Z. Black Widow so it's not only about wave analysis, I would want to emphasize. It's more about how to trade with moving averages, fractals, and fibs. Black Widow is from Nenet Kirkaz, and very specific system. It's very system oriented. So it has semi-automated indicators, bands, and I think let me think here. It's an indicator based trading system in any case, and has strict rules. So if you're looking for a very targeted way of trading the market, that could be good for you. So yeah, EAs, maybe you're more familiar with those. If you're looking at these webinars, at least, because of course this is focused on EAs. The EAs from Mislav Nikolic, such as Rush EA, 25% off. His EA, Ultimate EA, and mine, 25% off. If you do a combination, Rush and Ultimate, 39%. So Mislav Nikolic's EAs, nice moment to capitalize on the rental opportunity. This is a rentals, okay, for any time frame that is available. You get 25% off for Rush EA, 25% off for Ultimate. And if you do both, you get 39% off. So these are the EAs once again from Mislav Nikolic. Then the EAs from Elite Currency, Zeus EAs, you get 25 and 35 for Explorer and Builder. And the LOA.EA is minus 25% off. And then last but not least, the profit share model. So the difference between rental is that you make a payment basically for a period of time, and you can trade it however you want. You can use the software for your account basically. Whereas with the profit share model, you need to open an account with our partner broker, Key2 Markets, and basically you're trading without costs, upfront costs, but you have to share the profit if there is profit, part of it, anywhere between 20 and 30% typically. So you can get a discount on that profit share though. If you deposit 5,000 euros, you get a 10% lifetime profit share. So it's not only for 1 month, it's actually lifetime. Keep in mind that this offer has a minimum though. Your profit share, lifetime profit share percentage cannot go below 20%. Okay. So 20% will always be the bottom, but you can gain a lifetime profit share reduction for deposits above 55K. Just keep in mind, you cannot add 5,000 now and then in December remove 5,000 and keep the lifetime profit share. That's not how it works. The deposit has to be a net deposit minus withdrawals, of course, because otherwise obviously then people are going to try to misuse that and add 5, remove 5, get the 10% lifetime reduction. That's not the idea, and that's not how it works. So 10% off there for lifetime with net deposits staying above 5,000, 5% with net deposits above 3,000. Okay, so that's a nice little extra there for profit share members as well, I think, it's quite a big incentive, I think. So any questions? Anything you would like to ask about walk forward testing? I'll try my best to answer it if I know the answer. Or about our Black Friday special, of course. Feel free to ask me. Your dollar seems to be moving up. I can share a different screen now at this moment. I like this bounce at the 21 EMA, and I like the break above 118.70. So this upside is looking better now. 1, 2, 3, 4, 5. It looks like a bullish breakout, which is good for the long setups we have on Ultimate EA. So I actually hope it does go up, but so far I like this break to the upside. That's good. To get the profit share benefit, you need to add 3,000 euros for 5% lifetime reduction, or add 5,000 euros for a 10% lifetime reduction. That's for the profit share members. For if you're renting the EAs, there is basically no minimum. Whatever broker you work with, that's the minimum, because you're renting the software, so you're using that tool basically for your own trading purposes. You can change some parameters. Basically, the EA rental will have the same settings as ours, but you are free, of course, to change that. So there's no minimum deposit from our point of view. That minimum deposit is only valid for profit share members. Anyhow, this is just a first introduction to the Black Friday special. So there's going to be a separate webinar and a article explaining everything from A to Z. So you'll see all the details there. Okay, this is just a first warning for those that are excited maybe about LOA.EA or Ultimate EA or whatever, or SWAT or Black Widow. This is an early heads up that from Saturday onwards, there's going to be a good moment to capitalize on that. So maybe better to wait till Saturday. That's just an early heads up. No, not ECS Live, actually. No. Would you be interested, Thomas, in a ECS live offer? I can still ask if that's possible. All right, folks. I guess that's it. Thanks again, and good trading. We'll be back tomorrow with a euro dollar pound dollar video, of course, and next week with 2 webinars, at least wave webinars, 3 webinars actually, and then it's recap trading ideas on Monday, my wave webinar on Monday, and this webinar again on Tuesday, plus our euro dollar pound dollar videos, of course. So see you all very soon, and cheers. Bye-bye.